Hello and welcome to our market alert video for today, which is September 27, 2024. And I have a lot to get into with you, not the least of which is my commute to where I am now, which is in Florida. Boy, howdy, that was an experience through the hurricane. I want to share some of that with you. But also, we got a lot of important data as to where the economy seems to be going and what our investments are going to do and kind of how it all ties in with our fearless forecast for this year, which seems to be coming to fruition pretty much as we said that it would. But before we go into any of that, let me first of all introduce myself to you if you don't know me. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And we serve over 6,500 beautiful families across the country. And our singular goal is to create as many SCWPers as we possibly can. And SCWPers is the acronym for Second Childhood Without Parental Supervision. So when a client of ours retires, we call him a SCWPer and we want him to go, get out of here, go play, have fun, enjoy, be a kid again, and be a SCWPer. And let us worry about all this boring financial stuff for you so that you don't have to. So that's our goal. Our website is RPOA.com. And I encourage you to subscribe to this video. You don't want to miss a single episode. So I want to share with you my commute here because it was epic. So first of all, I want to show you this picture. Okay, so this is a picture that I took when I was in the airplane in Dallas, where we were going to take off to go to Orlando. And what you can see is it's smooth sailing until you get to that big dark green patch with a lot of orange. That's not good. That's the hurricane. And so the pilot said that the first hour of your trip is going to be smooth sailing, no problem. But he said the second hour is going to be rocky. In fact, it's going to be so rocky that I'm going to have the seatbelt sign on, and you guys are going to have to stay seated for the whole time. So everybody who needs to, you need to go to the bathroom now. So suddenly there was this long line for people to go to the bathroom in the airplane. Anyway, so we flew across, and sure enough, the pilot was right. It was rocky. It was, I would say, comparable to a Six Flags ride, in fact. And I do not do well with plane turbulence. Don't like that. Anyhow, we landed, got picked up by a courtesy van to take us to the resort. And here's a video of the monsoon that we drove through. And then while we were driving, if that wasn't bad enough, then what happened was I got all of a sudden my phone goes off, bang, 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 and I look at my phone and I got a tornado warning, and you better seek shelter right now. And we're driving and we're looking around like, oh my gosh, do you see any funnel clouds anywhere? Is there a tornado? And so we made it through that, got to the resort, and then that's when the actual hurricane hit. So let me show you a quick video of that because I went outside. So if you're wondering where I am, why I'm here in Florida, I'm here for a business conference. So it's business and pleasure. But of course, the show must go on. So we always produce these videos for you every week. Holy cow! Wow! So anyway, that was my adventure to get here. And in fact, I even texted. I said, "What on earth am I doing? Why am I going here?" Anyhow, so we got some important data this week. Good news for the most part. The GDP number came out. This is the gross domestic product, which is essentially the gross income of the United States. Okay, it's our income across all services and products, etc. And that number looked good. So that was a positive sign. Looks like the economy is slowing down, but the GDP looks like it's holding okay. The next number we got was the consumer confidence number, and that number came in strong as well. So the consumer, despite all this inflation and despite all the stuff that's going on, it appears that their confidence is holding. And that's important because the consumer represents 70% of our economy. So if they stop spending, we go into recession. So we want them to be confident, which usually means they're going to spend money. If they do that, the economy keeps going. So that's a good thing. And then the third data point we got was the PCE deflator, which is the Federal Reserve's favorite gauge of inflation. That's the one that they like to look at. And that showed that inflation is actually slowing down a little bit. And so that was well taken by the market. And you saw what happened this week. We had a massive rise in the market, and that's all good news. So this is basically playing into our fearless forecast, which we actually stated at the beginning of this year, and so far seems to be coming to pass. And that is that we saw the second half of this year, which is where we are now, of course, where the Fed would start lowering interest rates. And many of the bigger banks and many of the big economists were all saying, oh, 7 rate cuts by March. Well, that didn't happen. So we saw it in the second half of this year, and in fact, that's now the case. We said that bonds in the second half of this year would do phenomenally well, and they have. And so we're looking for that to continue. And then we said that unless we are heading into a recession, we see a big drop in employment, then that would be where we would start to say that the stock market would not do well. But the unemployment numbers, which we got this week, also showed that there are not a lot of new unemployment claims, so people are not losing their jobs in mass quantities. And so that was taken very positively. So the stock market looks good for the rest of this year, which is nice. And then, of course, the bond market with interest rates coming down, they like that generally. And so the bond market should do well also. So overall, if we didn't have the elections, everything would be hunky-dory, but we do have the elections. And so if you don't know what our opinion is about the elections, I encourage you to go watch our video cast that we posted, I think it's like 3 or 4 weeks ago, where I had my investment oversight committee director, Jordan Roach, on with me. And we looked at what happened in the last 10 election cycles. Very interesting. Essentially, there is the potential for a big drop in the market as we get into the elections closer to into October. But usually we've seen recoveries pretty quickly after that into the new year. And so we anticipate it's possible that this could happen this year as well. Now, the other thing is that we think that inflation is going to pick back up again going into the end of the year. And you heard it here first. Okay, so we're anticipating inflation ticking back up, being a concern to investors, and that could precipitate that correction, that drop in the market that I just described. But we don't see that as a permanent condition. We see it as a temporary condition, in fact, even a buying opportunity. So now, all of that being said, we don't have a crystal ball. And so that's why we always have our invest and protect strategy ready to be implemented. And because we work with people who are over 50, who are retired or retiring soon, our philosophy is that growth is important, but protection of principal is even more important. Okay, if your money is going to be providing you income during your retirement, then you need to protect that nest egg. You need to keep it as safe as possible. So you want to grow it for sure, but you got to protect it. And our strategy, invest and protect, is what we branded it, told us to sell in November of 2007 before the market crash of 2008. We stayed out for a year, almost a year and a half, so out of the stock market. And of course, in March of 2020, when the pandemic hit and the market went way, way down after that, our strategy said to get out. We protected our clients from a lot of that. So we want to protect you from the big downsides because we don't know. You know, the future is never certain. And so we always want to plan for the worst and hope for the best, not plan that the worst doesn't happen and hope the best happens. We don't want to do that. So that's where we are. Thank you for watching this video. Please subscribe, and also be aware we have a podcast that you may want to listen to. And we had over 250,000 downloads over the last year for our podcast. So I think you'll find it interesting. We talk about the whole spectrum of things to think about when you're doing your retirement planning. So again, thanks for watching, and we'll talk soon.